Hi, everyone, and welcome to the Amber Data Derivatives Podcast. I'm here with Matthew Liu, who is the co-founder and chief strategy officer over at SynFutures, a really successful up-and-coming DeFi protocol for trading perpetuals and futures on all sorts of coins. Matthew, how are you?
I am very good. GM, Greg.
GM, for sure. Well, I'm really happy to have you on. Obviously, your protocol has had a lot of success, so I'm really excited to sort of dig into that, both the successes and sort of the nitty gritty details of trading on SynFutures. But maybe before we jump into that, we can just chat briefly about your background and how you found yourself as a founder.
Sure. Thanks. Greg, yeah. So a little bit background about me. I started my career as a trader. At the time, I was running Deutsche Bank's Asia rates desk, rates derivatives. So this was more like IRS and the bonds and then some long-term FX stuff. From there, I chose a path that was a little bit different from most traders because, most good traders, they keep trading and then later on, they also moved to the buy side, on the hedge fund side. I found myself just okay trader. So then I decided, hey, maybe I need to learn more stuff, right? I need to go back to school and kind of upgrade my knowledge and so that I can be a better trader. Then I went to the MBA program at Northwestern. So it's north of Chicago, very nice place. And after that, I decided to help manage money for like large companies because in my memory, back in Deutsche Bank trading days, the most powerful clients are either hedge funds or the large treasuries of the multinationals. So I was like, hey, maybe now it's time for me to try sitting on the other side of the table. And I wouldn't say the word squeezing, but dealing with my former colleagues or my former self. So I did that, a couple of years also in the US, in Germany, and then in Asia. Then from there, I moved to work on like a fintech and risk management. This is where I got like a FRM and started working for Ant Financial to help establish their global treasury. So also I did that for a while before they started their blockchain business. So then I moved to lead the financial blockchain business for cross-border, I would say, sector of the overall like business. Then we did like $13 billion of volume of like a tokenization of
Wow.
SME credit, and then secondary market trading as well for that among the large institutions, making markets of that as well. But then later I realized the true value of blockchain, especially when it comes to the financial markets, lies in public network, and it lies in derivatives and DeFi. Hence, my two other friends of mine, we started SynFutures together. Initially, actually for SynFutures, the initial idea was actually different from what we offer now. The initial idea was to offer a term structure of every crypto asset on chain using DeFi. And but we soon realized that on-chain, because of the scarcity of liquidity, people love perps more, right? Because that basically kind of reduce one dimension in the financial product that concentrates liquidity. Think this as a leverage spot. That's how usually I see it. But it's a derivative, and then the other thing that we kind of envisioned in the beginning and continue to do was this permissionless listing stuff, so that allow us to have a large variety of things. And also we came from the AMM school. That's why we believe this on-chain native animal called AMM in various forms would have its own merits and continue to grow and evolve. So that's kind of the journey. Yeah. I'll pause here. See, any questions on?
That's fantastic.
Area.
So it makes a lot of sense to me that you come from the fixed income background. You're trading interest rate swaps. You're looking at sort of the lending or essentially the futures term structure and the different sort of potential rates or things are trading. And as you mentioned, crypto has been very sort of innovative in the perpetual futures contract. And essentially, that's really where the market trades most of its leveraged Delta One products is in the perp as opposed to the futures. So very interesting that SynFutures has kind of coalesced towards the perpetuals. Now, one of the things that you mentioned to me that's so fascinating is essentially the permissionless listing, where you can essentially trade, really tail small tokens where, this is really, in my mind, Uniswap kind of disrupted the space because you could essentially, create a market for any token with Uniswap, where before you needed a Coinbase to do the listing. And now SynFutures kind of has that same value proposition, but in sort of the leveraged perpetual space. Can you talk a little bit more about that?
Absolutely. Thanks for the question. You mentioned about Uniswap. That was exactly where the inspiration came from in terms of structuring the liquidity product for SynFutures. Because, when we started those right after the DeFi summer, we're like, okay, so there are the DeFi primitives, pretty well built, and they're simple and beautiful, right? So Uniswap, that it's like, in my eyes, it does not only allow like the large asset variety, but also it cuts out a lot of the middleman, right? So it's as if the lenders of the balance sheet and the users of the balance sheet to do like transactions, they kind of interact with each other directly and cut out all the middlemen. So it's beautiful. It is efficient. This was where we wanted to model on. That's why we not only started with AMM for liquidity, but also we really loved the permissionless listing nature of the Uniswap protocol. The idea we had in the beginning is to make sure everything with a price feed on chain can be connected to the SynFutures core smart contract. Hence, we can offer a perp market for that specific asset. So in the beginning, we thought about not only just crypto assets, but also, we can do that. For example, for a while, we were discussing with some of the very large data providers to offer products of, commodities, even FX stuff. And then we could also do equity because there are actually certain, equity oracles offered by these oracle providers on chain already. But the true fun stuff started actually in NFT, where we realized, hey, what if we hook this up with like fractionalized NFT products or like NFT floor price? Then for the first time in the industry, people can go long and short on their NFT collection with leverage. So that was something we introduced in 2022, like NFT futures, which coming from a relatively boring background, I knew nothing about NFT. I have to say almost nothing. But we could offer something for people to trade this with leverage, and that was the tipping point where we realized, wow, the permissionless listing function has a true value in terms of offering different assets in a perp format. And it is not only NFT, right? So later on, we also had like the hash rate futures. We also had other products. We're actually now in discussion with partners to do basically the like social score perp, things like this.
That's interesting.
Influence. And the world is open, for new assets, and then we want to make this fun. That's how the journey is in terms of development there. And of course, today we also offer a variety of crypto assets in the format of perp, and then lots of this come from the community. Mm-hmm. We do run a process for community to vote, to express their opinion on what are the trendy assets, and sometimes these communities of these assets come to list their own token themselves. Sometimes we really like these assets, and then we kind of do a little bit sponsorship as the starting point before it further grows. So yeah, that's it's I would say it's a feature that we envisioned in the beginning and worked out in various different ways that may not necessarily be the same as what we thought in the beginning, but in a better way. Yeah, that surprised us.
Wow, that's fascinating. So, I mean, all those hash rate futures, like NFT, floor price or fractionalized futures, very interesting. You talked about these other things like a social score future. So one of the things that's really interesting and a potential problem to solve with these types of like bespoke futures is like who's going to market make on this type of stuff, because you need typically some good market making players to essentially make the experience good for takers and bring volume. So you guys also maybe inspired by Uniswap as well, also have a very fascinating sort of solution to market making, which is an AMM, so people can passively LP, also using a concentrated liquidity range that's potentially subject to liquidations and not, and so it can allow you to essentially passively earn yield from being an LP. Did I cover that right? Is that the idea? How can you explore the automated market making aspects a little bit more?
Sure. Thanks, Greg. I think you described it very well. The base layer liquidity we envision for any asset will be the passive LP, in the form of like a whole spectrum Uniswap V2 type of LP, or in a concentrated liquidity LP for a certain price range. This will be the fundamental of any asset liquidity, right? If you take a step back, even like when we see crypto assets as a whole, like on-chain world as a whole, right? For example, any token, there will be spot DEX there first, right? And then there are more active market makers in other venues that combine together as the basically the comprehensive like liquidity. And then from there, when we look at SynFutures, right, we have the passive LP, that's the base layer. They are usually incentivized by the trading fees, as well as additional incentive, for example, from the network, for example, from us, and then they can start providing the base layer liquidity, especially for a lot of long tail assets. And then for those assets that the active market maker would have appetite to market make, then the active market maker can use the limit order functions to basically add additional liquidity, to add bid offer. So the two in our latest model, the V3 Oyster model, are combined into one. That because we see for the major assets, eventually the limit orders used by the active market maker are gonna make majority of the liquidity, because it's the most capital efficient around the bid offer. But again, we want to make sure this model also covers the long tail assets because of our permissionless listing feature. So the two are universally combined into one.
So in the case of like Uniswap, when someone is a passive LP, they typically provide sort of both sides of the tokens in each pool, like USDC versus ETH. If I'm a passive LP on SynFutures, can I do a single asset, or do I have to provide sort of both sides as well?
For the spot market, like Uniswap, you do need two tokens, right? For the derivative AMM, such as SynFutures, you only need one token because it's a margin system. So think about the token you put in as the margin, and then the AMM start to make markets two-way, and then depending on which way you are, you have implied net position that you have the margin to basically margin against that position. Therefore, in our design, you always only need one token. It's actually easier for people to do LP.
Oh, that's fantastic. And then so another really kind of interesting component of perpetual swaps is, the funding rate. So if I'm, working with easy currencies like Ethereum, I could probably look at, where's the market everywhere else, and I can look at the difference between, spot or the underlying mark price and where the perp is trading and calculate the funding. What about things like some of the more bespoke ones you talked about where there isn't necessarily a market elsewhere? How does the mark price or the funding get calculated in a situation like that?
Sure. So for like most of the assets that we list, actually all the assets we list, there needs to be a price fee. Yeah. So there needs to be this price feed can be it can be on-chain price feed like an Oracle. It can also be an off-chain one, and then we have a conversion mechanism to make sure that we can also take reference to that price feed. That would basically be the guideline for funding calculation, where there's what we don't call mid price, but like a fair price, and then there's a like Oracle price or a feed price, and then that gap is gonna be going into the calculation of the funding rate.
That makes
and then we calculate funding rate basically every block, and that number accrue on every block, and it is only for the users, only when the user would have actions that the funding rate would actually settle, but it is accrued continuously.
Interesting. And is the fair price or the mark essentially just a mid or just the feed level, or is there like a moving average that's applied as well, or how does that detail work?
Yeah, we do have like an EMA mechanism to smooth out the feed or the Oracle price. But for the mid price, right? So that's live. That's market trade, because there's a in the AMM design there's a fair price, which is like the mid price. Because the bid offer is simulated by the slippage on two sides, right? So you start with a fair price in the middle.
Oh, that makes a lot of sense. And then another kind of interesting component, or super important component from this, is being able to understand when someone's eligible for liquidation. So you kind of have to have a good fair value, a mark value. How does it occur for if I'm a passive LP and I'm going to be liquidated? How does that process work?
So number one, you're right. No matter actually a trader or LP, if the position is risky for the entire system, it will get liquidated. Now, the passive LP, we usually recommend people to do like relatively wider range, because the mechanism works in a way, if the price moves to one side of the range, that position gets liquidated. Because by moving to the end of the range, that basically means the remaining margin of the LP would no longer be able to support the basically the net position, the implied net position of the LP, subject to a minimum margin ratio. So that's why further from that kind of cliff point, the LP's net position will become a not yet a bad debt, but a risk to the other traders, right, the other LPs, and that's why liquidation would happen at that point. That's similar to traders. Yeah, basically that's how we design this thing in a system with margin, right? So whenever there's risky position, we need to clear that out to protect the rest of the users.
That makes a lot of sense. And so some of the CeFi exchanges, liquidations, like the risk engine will come in and they'll sell out the positions and flatten up the trader. is it the same type of system, or is it more like a third party trader comes and takes over the position? How does that work?
Uh, Good question. There are actually two ways. Yes. There's the TradFi way, there's the DeFi way. We start with the DeFi way, actually. In the beginning, we started where it would have to be like a third party takeover, right? And then we have people can query on chain on the health ratio of these positions, and then they can take them over and help square the position. But to be completely honest, it doesn't work out sometimes. Yeah, because sometimes there are just not enough people looking or querying these positions and taking them over. So then, because we also have the AMM, that's why if no one takes it over, I think there's a short cooldown period or like a grace period, then the system would force that position to trade against the AMM to close the position. Yeah, so because the liquidity is always there, and then the remaining margin would go to that AMM.
Oh, that's fascinating. And if I'm querying sort of maintenance margin ratios and looking to do takeovers, is there like a incentive for me to take over a liquidation position? Is there like a haircut or like a penalty fee, or what's the incentive for someone to do that?
So as of today, we didn't give like an extra incentive for the takeover, but basically the takeover party can not only take over the position but also the remaining margin.
Oh, I see.
Of the risky position. Yes.
I see. So they'll basically earn the margin and then essentially take on the position at fair value is kind of the thinking. Oh,
yes.
Cool. Fantastic. So moving outside of sort of the nitty gritty details of the risk engines and how all those things work, broadly speaking, so SynFutures has been really successful. You guys have done $120 billion of cumulative volume and currently have about $200 million of open interest as of right now in the market, these are huge numbers, especially in the DeFi space. How did you guys achieve all this success? And just for background, you guys are both built on Blast network and Base network. Can you give us a little bit more of an overview around sort of your success and building on these L2s?
Sure. Before we touch on the exact numbers, I also want to mention we've been building SynFutures for actually more than 3 years in 3 different versions. And then it's this latest one, the version 3, that we see as a relatively speaking, satisfactory product. And as you mentioned, we launched the version 3 on Blast on the same day that Blast launched in, I think, late February, right? It was the 29th of February. That's the day we launched the version 3. Initially, I would say most of for example, the liquidity side, people came to be honest, right? People came for incentives. That was the first batch of liquidity that we received that started to support the market. But the trader side, that's really something that is even out of our own expectation.
Wow!
Because as I mentioned, even before in our version 1 and version 2. We had some, good, I would say, trade numbers in terms of volume, but the growth was really exponential when it comes to starting to do this on Blast and starting to offer more permissionless assets for trading together with the incentives. That's something that we saw is really working, and it's not only working for obviously the smaller players. We've also seen some, large institutions also started trading on SynFutures, even without, for example, or like a formal engagement with them.
Wow.
So that's something I would say a job well done by the growth team. But I would say the bigger factor, right, is the market, it's the user experience, as well as the support from the networks, for example, Blast, Base. And then yes, and now we're on Base, also another starting point for us. We also started small, and hopefully can also grow further as SynFutures is designed to be multi-chain by nature.
Yeah, that makes a lot of sense. And you mentioned some of the networks gave you support. So I know Blast did sort of this big bang competition. Actually, SynFutures was one of the winners. Maybe you could just touch on that. And is Base doing something similar, or have they been just as supportive for you guys to build on Base?
Sure. The Big Bang was a competition that SynFutures won at the beginning of the deployment. And that was really helpful at the beginning because, putting aside the incentives, like, for example, Blatt has gold, has points, and other mechanisms. The most important thing, I believe, is traffic flow. Basically, I wouldn't say an endorsement, but, we were also presented, for example, as one of the core, like a Blast perp decks, and then we were also featured in the portals. So these all bring us quite a lot of new users. And same thing with Base, actually, because we're now part of the Base on-chain summer campaign. And that has been very good organic growth we witnessed since we joined the campaign 2 weeks ago.
Wow.
We're still doing more. Yeah.
Oh, that's fantastic. And so one of the things you mentioned was, your incentive program was really good for bootstrapping a lot of users. So, really what we've seen this year is sort of the resumption of airdrops as an incentive program that seems to have been, we saw Solana chains doing a lot of stuff like that. Does SynFutures have a token? Do they plan to have a token? Is there that type of incentive going forward? I mean, no alpha leak if you can't do alpha leaks, but just kind of curious on sort of that angle of it as well.
Sure. We haven't launched token in the last 3 years, and now it's about the time. So we have internal plan to tentatively launch the token in Q3 this year. So we're really working on that. There's no set date or schedule yet, but that's within expectation at this moment. Yeah.
Oh, that's fantastic. Yeah, congrats. We'll be on the lookout for that. Have you guys thought about sort of the tokenomics yet, or is that something that's still kind of under wraps? Is it similar to, a fee discount on a token, on trading fee discount or something like that, or is that to be determined?
I think there are two parts in the tokenomics that will for sure, have when it comes to the SynFutures token. Right. The first part, as you mentioned, all the platform level functions, such as you mentioned, like fee discount, and the others. Actually, we have kind of done research on various utilities of these tokens on different trading platforms, and we want to make sure we capture the best of those for our token holders and our users. That's one. The second one is, of course, the further voting as well as the staking incentives. So we also have a design on that as well. So just to make sure the token holder will get good value, not only when they're using the product, but even if they just stake the token. Yeah.
Oh, that's fantastic. Well, I'm sure you guys will be really successful with that. I'm sure you guys have thought through some really interesting scenarios in tokenomics. So, coming from an options background, I have to ask, is SynFutures ever going to start also doing, non-linear derivatives such as options or anything like that as well?
So we actually have been thinking about this for 3 years, about building something that's non-linear. And to be honest, that's also where, for example, my interest is, because also I trade option on the side as well. Now, there's one thing we're actively watching to see if that can improve. That would basically serve as a trigger maybe for our action which is the on-chain liquidity.
Mm.
Why I say that? Because I think in the beginning I mentioned we started with a product with futures with basically maturities.
Yep.
Right. And that kind of we saw that of course with maturity with settlement the conversion to spot is certain, so it's better for the hedgers. But we also saw that because of that maturity dimension, the liquidity were scattered a little bit, right? So let's say it's Bitcoin against USDC. Is it maturing this quarter or next quarter? And that's basically two pools, right? When it comes to AMM market making, that will mean if you have 10,000 USDC, you're going to split that into two different pools to support essentially two different products, right? Because they're not fungible. That's why when it comes to option, we want to see a bigger, I would say, pool on chain overall before, for example, the same amount of liquidity can be put into different slots of strike price. Because that's also one dimension that we think is a little bit, kind of, I would say, kind of not really helpful in terms of liquidity concentration. I think in the CeFi world or in the trading world, there's enough liquidity for futures and futures with maturity and options with different strike prices. But when it comes to like a fully on-chain world, we're still waiting for that day. I think if when that comes, it's definitely a good time to also build out a non-linear product.
Yeah, fantastic. Yeah, I get what you mean. Essentially options are sort of like notoriously fragmented because, not only do you have one instrument with multiple expirations, but you have a bunch of strike prices to choose from. And then you got to look at the put ladder or the call ladder or put or call side of the ladder. So if we're thinking about rebuilding a hybrid system like you have, which includes an AMM, how does that AMM aggregate liquidity across the whole option chain in an efficient manner? That's a great point. So typically I like to...
Yeah, I would say to visualize this, right? So if today the perp product is one big ball, if you think of it in vision, it's a one big ball, and now it's as if now I have a 3-dimension space and I need to fill many balls to make sure this whole space is filled. That would divide the one big ball into, I don't know, if it's 3 by 3 by 3, that'll be 27 smaller balls. That we need each of this, or at least quite a couple of these 27 balls to be large enough to make it functional on chain.
Yep, that makes a lot of sense. So Matthew, typically I like to finish here with two kind of personal fun questions. So the first one is, when you're not the CSO of SynFutures, what do you like to do for fun outside of work?
I do quite a lot of cycling actually out of work because I'm in Singapore, and then it's very nice to cycle along for example, the East Coast Park close to here. That's really nice. And then also I try to spend a lot of time with family. Especially after spending too much time on Twitter. Sometimes you really need to see real people and touch the grass. That's important.
I love it. And then, across your trading career and starting at Deutsche Bank and building out SynFutures, I mean, you have a lot of experience as a trader and with traders. Is there a trading book that you've come across in your career that you'd like to recommend to listeners?
It's a little tough, because I have to admit, I have not been reading like trading books for a while, like a long while. Yes, I do trade a lot, but I would still say maybe it was in the early days. I read something about how to do risk management rather than how to do a better trade. I think that's a more important skill than trading itself. Making sure sufficient risk management. But the exact book, sorry, I can't remember that.
No worries.
Yeah.
No problem. Well, Matthew, thank you so much. It was great to have you on. I'm very excited to see the future of SynFutures. So thank you so much.
You're welcome. Yeah, thank you, Greg. This is a great conversation. I really enjoyed it. Yeah, and then whenever there are more questions, let me know. Even after today's session. Yeah, thanks.
Fantastic. Thank you, everyone. We'll catch you next time. Perfect.